Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Wednesday, Hump Day, actually. May 31st, end of the month here. We got just a few economic data today. We'll start off with the Chicago PMI for the month of May. So this is Chicago PMI is the manufacturing numbers out of the Chicago region, and so far this month hasn't been, this past month hasn't been so kind, and you can kind of see why here. Even Chicago, we had a 58.3 back in April, and it dipped down to 55.2. So anything above 50 is really showing some expansion or getting better. Anything below 50 starts contracting or getting worse. New York region, earlier in the month we saw it had a negative. It actually. It dropped a bit. So this is what we're talking about. Manufacturing so far this month hasn't been too kind here. So we'll have to kind of see if this is going to be a trend developing, or if this is just kind of a blip, at just maybe a seasonal thing, and maybe things pick up. So this is something to keep an eye on. Also, another concern is pending home sales here for the month of April. So back in March, it dropped 0.9%, and month of April it dropped another 1.3%. So pending home sales, just the market's just so tight right now. We're not getting a lot of inventory out there, so these pending home sales numbers are looking more dismal each time we see it. And we just don't have a lot of inventory out there. We got a lot of buyers, but just not a lot of sellers at this time. And unfortunately, we're starting to see these numbers dwindle down quite a bit here. And later today, probably about 11 o'clock Pacific Standard Time, we'll see the Fed Beige Book come out. So we'll have to kind of wait and see how things kind of play out later on here. So let's go ahead and take a look at the headline news. And not much here. We got the stock market, so it's down. A lot of it's taken from our economic data. That's more what's driving the stock market today, as, of course, it's not so rosy today. So let's go ahead and look at the bond market. The bond market shot up yesterday. The bond market kind of shot up primarily because we had a couple of Fed speakers, and one of the comments, and both were dovish comments, but the one that probably hit the most was Lael Brainard's comment saying that with the inflation becoming more tame, we might have to rethink our positioning basically on, that's not word for word, it's just more verbatim. Thinking on the rate hikes. So basically, as you may have seen, the core inflation went down. Instead, the month before it was at 1.8, it dropped to 1.6, and this month it dropped down to 1.5. Their target rate's at 2% up there, and it's dropping. So when you're raising interest rates, it slows the inflation. It's supposed to control it and not let it get out of hand. Maybe they're raising it too much. Or maybe they raised it too soon, and now we're starting to see it go backwards. This is something they're, of course, going to be watching, and of course, everybody's watching. Nobody wants to see deflation. Now they have to backtrack. So after she made those comments, we saw a nice little move here. If you remember, in the morning, we were up about 3 basis points. We were a lot further here. So from here, we were actually down about here. For the day, and then we shot up about 16 basis points above the first level resistance here. Now this second level is going to be pretty difficult to get ahead of here. Basically have to have a pretty gloomy outlook for us to get up above this, and don't really anticipate seeing any of that gloominess on there. So I think right now, if you have interest rates you're floating out there, refinance or purchasing, you might want to lock in and take cash in while we're at the height here. So I don't think you'll see it get any better than this at this point in time right now. But right now we do got good rates right now. As you can see, we're pretty close about where we were. We started off down, and then now we're up about where we left off yesterday. So pricing would be about the same. So interest rates are about the same what we saw yesterday. Alright folks, so that pretty much concludes it, but if you guys want to get more data throughout the day and after this video, especially after the Fed book is released, come over to Twitter. You can find me at Mike Bjork on Twitter. I do post throughout the day, and probably get more information on that Fed Beige Book later today. Also, if you guys are in the market for a mortgage, if you guys are looking for pre-approval and want to buy a property, I can give you pre-approval letters as well as help you with the transaction, as I am a loan officer. We do have what we highly recommend is send us your documentation. We get you through our underwriting, get pre-approved, so that way when you make your offer, it's basically almost as good as cash in the sense that basically we just need to update or basically get appraisal and contract and everything else to help you guys get your property and move it along that much quicker. Also, refinances, where some of the things that have been real popular are people who are in adjustables now trying to get into fixed. So if you have an adjustable rate, want to get in fixed while the rates are going up, now might be a good time. We can assist you with that. Or those who want to shorten their period. They have a 30-year fix, are ready for a 15-year fix, so going from 30 to 15. Those are also options we can help you out with. Or those who want to take money out of their properties and reposition it. So I have investors that are taking money out of their properties and buying more properties, or people who want to do debt consolidation, pay off for credit cards or other bills and stuff like that. So those are all different options we can help assist you with. So anyways, please feel free to reach out and see how we can help you out. Have a wonderful day. Thanks so much for watching. We'll look forward to seeing you guys tomorrow. Bye-bye.